Our world is run by two different types of companies, public and private. And what you might not know as well is a lot of the private companies out there are actually owned all by the same people. Welcome to the world of private equity. Private equity funds are a pool of money that use that money to invest in privately held businesses. This industry is so large that in August of this year, private equity firms reported $509 billion of dry powder. Now, dry powder is just cash they have available to go out and buy new companies. So in this video, we're gonna break down the top 5 private equity funds in the world. Now today, we're gonna talk about some big players, but I have a lot of friends and people around me that do private equity at a small scale. They own a restaurant and they buy up the other neighboring restaurants. They have a farm and they buy up other farms. And if you wanna learn more about this, we have another video on how to actually start a private equity fund. Now, coming in at 5 is Warburg Pincus. Now, before I go any further, I'm gonna lean in for a second. These numbers are from Investopedia.com. If you wanna argue with me, hit me in the comments below. I know there's other funds that we're gonna leave out. And by the way, private equity funds typically are very private. They don't share their numbers. It's actually hard to get a top 5 ranking. So with that, back to number 5, we got Warburg. Originally founded in 1939, Warburg was originally an investment bank. However, in 1966, they merged with a venture capital company called Pincus, which then exploded them into this excitement of getting into new private deals. These two companies merged together really formed the modern day private equity fund. They were one of the first to do this. In 1971, they raised a whopping $48 million on their first round of fundraising, and today manage over $58 billion. Now, most of their current investments actually are in the Chinese market. So a majority of the names that I would say you probably wouldn't recognize, but one name that you might recognize is OfferUp, which is the largest mobile marketplace in the United States for buyers and sellers. Coming in at number 4 is TPG Capital with a whopping $85 billion under management. TPG stands for Texas Pacific Group, and they're one of the largest and most well-known private equity funds in the world. Now, their founder, David Bonderman, has a very interesting story how he got into this industry. David graduated Harvard Law School in 1966, but one case in 1980 changed his life forever. The year was 1980, and citizens of Fort Worth, Texas were fighting against the federal government on a proposed highway, which was claimed to pass through an historic district in their downtown area. And who better to support and represent them than David Bonderman? The guy who hired Bonderman was a man by the name of Robert Bass, who inherited a lot of money from his uncle and was so impressed how David organized and ran this group on this fight against the federal government that he asked David to partner with him on their next business venture. David Bonderman dropped everything and decided to partner up with Robert Bass. In the 1980s, they did numerous leveraged buyouts, or LBOs, which they focused on buying struggling household brands. With a great career at Bass, he decided to leave and launch his own group, which then became TPG Capital. Formed in 1993, they actually own a lot of household brands that you'll recognize today. Airbnb, Burger King, Chobani, Fender Guitars, Lenovo, Lifetime Fitness, McAfee Virus Protection, Norwegian Cruise Line, Petco, Spotify, Uber, Vice News, and so much more. Nah, you didn't know those were all connected, did you? Which now brings us to number 3 on the list, KKR. KKR has a whopping $252 billion amongst all their funds. And all of this was started in the late 70s in a little diner in New York City. Henry Kravis and Joe Roberts sat down and formulated an idea for them to go and get into the private equity game. That little dinner led them to raise over $1 billion over the next 8 years. And today they're huge players around the world, from the Middle East to Europe to the US to Asia markets. They are everywhere. And they did most of these acquisitions by using what's called a leveraged buyout. I mentioned it earlier. A leveraged buyout, or LBO, isn't that complex. It's where they put down a little bit of cash, they borrow money from a bigger bank or institution to fund the purchase of that asset, that they then grow, they pay off their debt service, and they take huge profits. KKR is reported to have the largest leveraged buyout ever when they bought RJR Nabsco, and again in 2007, they rebroke their record when they bought Texas Energy for $32 billion. This fund is wildly successful and has ownership in many companies you'll know today. They have huge ownership in Epic Games, yes, Fortnite, Fiserv, Neighborly, Swift, and so much more. Which brings us to number 2, the Carlyle Group. Boasting a total of $265 billion, the Carlyle Group is the second largest private equity fund in existence. Founded in 1987 in Washington, D.C., it has over 1,800 employees, which, by the way, is pretty small. A lot of these funds, just a side note, if you watch our other videos on funds, Funds don't need a lot of employees to be very massive. Hence, when you're making billions of dollars and that flows down only to 1,800 people, you make a lot of money working in private equity or running your own private equity fund. But like KKR, the Carlyle Group was actually founded over dinner as well. And the name Carlyle comes from the Carlyle Hotel in New York City. In the 1980s, they raised over $100 million and it's been lightning speed since then. Carlyle primarily deploys capital overseas, but some of the companies you might recognize is Supreme Clothing and McDonald's China. Now, coming in at number 1 is the massive, 3 times bigger than the second place, Blackstone Group. Blackstone touts a $612 billion AUM in their funds. Again, 3xing the Carlyle Group in second place. Now, Blackstone, with that much money, has their hands pretty much in everything around the world, but I'll walk you through a few stories you might not know about Blackstone. Blackstone was founded in 1985 by Peter Peterson and Steven Schwartzman. They originally started as a mergers and acquisitions boutique and pooled together a few $100,000 to get started. They then changed their model and moved into private equity, and they raised $1 billion on their first fund, which was a record for that time. The name Blackstone came from their 2 names being meshed together, Peterson and Schwartzman. Schwartz is German for black, and Peta or Petra is Greek for rock. Now, in 1987, they joined in on a 50-50 partnership with BlackRock and Larry Fink, which if you don't know about BlackRock, they manage just over $6.5 trillion with a T, dollars as an asset manager. I have another video here about BlackRock. They're crazy. They run the world. They're Fed backed. I can go for an hour on the rabbit hole of BlackRock. But an interesting part about this story is that Schwartzman decided to sell his shares in BlackRock for a mere $250 million, which is nothing to bat an eye at, but those would be worth $12 billion today if he would have held on. And Schwartzman gone on to say that selling those shares in BlackRock were one of the worst business decisions he ever made. We could talk for days about BlackRock's holdings, but they've got holdings in Spanx, Airbnb, Ancestry, Bumble, and so much more. Private equity is all around us, and most companies that you interact today are probably owned by one of these 5 companies that are on this list. If you want to learn how to start funds or scale funds, you can check out these other videos here. Thank you guys so much for your time. See you in the next video. Bye.